Indian stocks were upgraded to overweight investment category by the global financial sector powerhouses such as Goldman Sachs, CLSA, Morgan Stanley, and Nomura. In the overweight category, India has been upgraded, and the reasons for India's upgradation to overweight category are mainly the increasing domestic demand and the constant flow of funds into the market from mutual funds and the emergence of India as a new supply chain apart from China. Indian GDP growth is expected to reach 6.5% in 2023 and 6.3% in 2024, according to these financial powerhouses' recent estimates. A remarkable aspect is the downgrading of Chinese stocks in Hong Kong to market weight due to low earnings growth of Chinese companies. India would continue to grow, supported by steady earnings growth and macroeconomic stability, even though 2024 could be a tricky time for the whole of Asia Pacific region. There is no doubt that India is the region's most promising long term growth market, in which earnings are expected to grow in the mid teens over the next few years. Mostly domestic oriented growth will provide investors with a variety of alpha generating themes such as Make in India, large cap compounders, and mid cap multi-baggers. However, it was warned that there could be some market uncertainties in the near term. Volatility may increase as a result of these events, but it can be hedged inexpensively. With nearly $2 billion, that is equivalent to rupees 16,500 crores in monthly mutual fund inflows into systematic investment plans, an important source of demand for domestic buying has been offsetting the foreign fund selling in terms of the pressure. A steady earnings growth and macroeconomic stability will support Indian markets going forward even in 2024, which would otherwise has been picturized as a tricky year for the entire Asia Pacific region. The economy of India is offering the best structural growth prospects in the Asia Pacific region. In the period between March 2021 and October 2023, domestic investors were net buyers every month, helping the market temper sustain the sales pressure from foreign institutional investors, causing the benchmark Nifty 50 NSEA to jump about 31%. This positive jump of 31% has come from the solid investments made by the domestic investors. Although domestic participation was positive, valuations have risen to an elevated 20 times the next 12 months earnings as a result of the market surge. The earnings growth and the expected earnings growth is also helping to support the higher valuations of the market at this point of time. One thing we need to remember that even when compared with MSCI Asia ex Japan, which has declined by 3.75% so far in 2023, NSE Nifty 50 has gained 7% in 2023. All in all, the indications are very positive. Investors are quite buoyant. When there is a pressure from the foreign institutional investors, yes, there is a domestic support coming in, keeping the market sustain the levels. And when the pressure from the domestic investors is surging at one point of time or the other, then the foreign institutional investors are coming back to the Indian markets. This is how investments, though changing hands from the domestic investors to foreign institutional investors, from foreign institutional investors to domestic investors, but ultimately, when you look at the net level, the investment flows into the markets are substantially increasing. That's quite remarkable, and that makes us say that India is definitely investment category in terms of stocks. Thank you very much for your patient hearing.